With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then ChannelChek truly is the orchard. The listed companies support ChannelChek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for ChannelChek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by ChannelChek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on ChannelChek. Today's presentation features Cumulus Media, NASDAQ ticker symbol CMLS. Following a formal corporate presentation from President and CEO Mary Berner, Noble Senior Research Analyst Michael Kupinski proctors a Q&A session. Visit channelchek.com or click the link in the description for Noble's research on Cumulus, as well as news and advanced market data. And now, here's Mary Berner.
We're pleased to have this opportunity to present our new investor presentation. I first want to note the safe harbor statement, which will also be posted in the PDF of this presentation on our website. Our hope is that from this presentation, you take away an understanding of our strategic shift from a one-dimensional radio-first model to a multi-dimensional audio-first media company and why that positions us for growth. Appreciation for the upside inherent in our value creation model, confidence in the management team as a group of consistently strong operators who will effectively optimize our value creation levers, and ultimately, clarity on why Cumulus Media is an attractive investment, particularly now. Over the past several years, Cumulus has transformed from a one-dimensional radio-first model, as in one product distributed one way, consumed on radio devices on a set schedule, to the multi-dimensional, multi-product, multi-channel, and on-demand audio-first media company that we are today. We create value by linking our two main constituencies, our listeners and our advertisers. And today we develop and distribute audio content in a wide variety of ways, reaching nearly 250 million people every month across every community in the US. Our sellers are tasked with monetizing those audiences by selling the billions of monthly impressions we generate from them, along with ancillary digital marketing products, to tens of thousands of businesses. For investors, the main question is, why invest in Cumulus Media now? Here are the highlights of our answer. We'll cover each in later slides, but the punchline is that Cumulus has a significant opportunity to build future shareholder value, much of which is not currently reflected in our stock price. I know that Mike Kupinski agrees. In fact, his current target for us is $27, close to triple current trading levels. In short, we believe that our multi-dimensional audio-first positioning is strategically compelling. Our business model is well-balanced with excellent free cash flow characteristics and multiple digital growth vectors. Our strong balance sheet and liquidity position give us substantial flexibility in how we allocate capital to build shareholder value. And we have the right board and management team to execute on the opportunity in front of us, which in combination make Cumulus Media an attractive investment. A core element of our audio-first strategy is our significant array of our assets and talent and brands. You see a sampling of those on the right. We have a massive platform, including our local radio business with 413 stations, number 2 in the radio industry, our Westwood One network with 7,300 affiliates, number 1, our robustly growing podcast network, which generated over 1.2 billion downloads last year, a streaming network delivering 5 billion impressions a year, and a substantial portfolio of digital marketing services currently serving more than 3,000 clients. Now here is a snapshot which illustrates how our execution under the multi-dimensional audio-first model translates into financial performance. Our business has been recovering nicely from its COVID lows, which is reflected in our recently issued 2022 EBITDA guidance range of 175 to 200 million. Of particular note are the continuing strong results of our digital businesses, which collectively delivered more than 50% growth in Q2, now representing 14% of total revenue. Also, we've improved the strength and flexibility of our balance sheet, despite the pandemic, continuing our ongoing mission to de-risk the balance sheet and increase the optionality we have with respect to capital allocation. As I said, over the last few years, we made an important shift from operating as a one-dimensional radio-first company to a multi-dimensional audio-first company, which substantially leverages the ability of our talent and sales force to drive value. Now, I want to spend a few minutes describing the difference between the two because it is transformational. Shown here is the traditional radio model, a one-dimensional model which relies on one type of content, radio shows, created usually mostly career radio DJs, distributed one way over the air, and consumed through radio devices on a set schedule. For many years, this was our model. And to be clear, radio today continues to deliver massive listening audiences, reaching 93% of the country's adults every month. And Cumulus itself generates nearly 250 billion sellable impressions in traditional radio annually. However, with the advent of the digital era, the explosive growth and massive expansion of both audio product and the ways in which people can listen to that product, we saw a clear and compelling opportunity to redeploy our assets, talent, and brands across the vibrant and growing audio ecosystem to increase our audiences and our revenue. So to meaningfully participate in the larger audio ecosystem, we've been evolving our content creation process and expanding our distribution. In this audio first model, we view our talent, including our terrific DJs, as multi-dimensional audio content creators who think expansively about the amount and type of audio content they can and should generate. And that includes new content as well as repackaged content, including radio. And they do that to reach listeners across the larger audio ecosystem. Our talent now has far more opportunities beyond radio, ranging from podcasts to digital audio to live events, to deepen their engagement with their current audiences and to attract new ones. So this shift from radio to an audio mindset has also broadened how we think about our potential talent pool, as we look for people who have had success in connecting with audiences in all sorts of non-radio arenas, from podcasters to social media influencers to authors and athletes. And this approach gives us a deeper tool of talent to draw from and a very powerful ability to expand the output and reach of any given talent, including our traditional radio talent, as we're going to show you in a minute. Now, another key dimension, clearly, of this audio first model is that we now deliver and our listeners consume our content much more broadly and flexibly than before, including on demand. And that, of course, allows us to expand our touch points with existing listeners while also attracting new audiences. So let's take a look at how this audio first focus has worked for us to expand our audiences. Bert Weiss has hosted The Bert Show, a popular morning show, for decades. The show was first expanded through syndication to quadruple its local broadcast reach, and then, in our first digital move, we began to stream the show, doubling its reach to more than 1 million people a month. Bert then extended into podcasting, using repurposed content by converting his radio show each day into 20 different podcasts using short snippets of regular show features and daily highlights, generating 6 million downloads a month. And this is a terrific example of how we leverage content in this new business model. In the second example, our expansion went in the reverse order, from digital to radio. We helped Ben Shapiro, the country's leading voice for young conservative millennials, grow his News Talk podcast into one of the top podcasts in the country, generating 25 million downloads a month, and then launched him in radio with a combination of repurposed and live content in over 375 stations. So turning to monetization, One of the great benefits of our historical model is that radio monetizes its audiences very efficiently, generating a lot of cash flow in the process. We generate billions of impressions from our radio shows, which were and still are sold through about 800 sellers in local, national, and network channels. However, the traditional radio first model, those sellers almost exclusively sold radio spots, with our revenue opportunity limited to the $14 billion total addressable broadcast radio market. With the transition to the multi-dimensional audio first model, we go to market with a much bigger set of products, including a greatly expanded array of audio content products like podcasts and streaming, and a complementary suite of digital marketing services. Our sales force uses this entire portfolio to upsell existing clients and attract new clients, and we have supplemented their efforts with programmatic monetization. Having these new capabilities and offerings enormously broadens our revenue opportunity. No longer confined to the $14 billion legacy radio ad market, our total addressable market today is $30 billion and growing. So let me show you a few examples of the clear additive nature of this audio first model by showing you how this expanded product offering has allowed us to grow and increased our revenue and share of media spend with our current clients and attract new ones. Again, a clear illustration of the additive nature of the model. Examples include a national auto aftermarket podcast client who added radio to their campaign, increased their total spend by nearly 60% over last year. A local financial services company who were sold on complementing their digital marketing services buy with a radio campaign doubled their year-over-year spend. A longtime national insurance radio client who added podcasts to their buy increased their spending year-over-year by 45%. And finally, a national sports betting company who hadn't advertised with us at all before, but compelled by our ability to deliver a multi-product and integrated audio marketing program, made a substantial multi-million-dollar commitment. And these are just a few of the way too many to count examples, which demonstrate how our bigger portfolio of products and services improves the ability of our sales force to generate sustainable incremental revenue. I'd like to walk you quickly through our recent history, just to give you a better sense and understanding of what we have done over the last few years to reposition ourselves as a multi-dimensional audio first media company. There's a lot on this slide, so I'm just going to give you the highlights. When I joined Cumulus in 2015, it was a company in free fall. The new management team both stopped the bleeding and focused on developing sustainable revenue growth, maximizing operational efficiency, and optimizing our asset portfolio to put the company on a track that would build shareholder value on a sustainable basis. After the restructuring phase, we concentrated on developing a growth-oriented strategy, which resulted in our moving to our multidimensional audio-first model. Our efforts paid off in significantly improved financial results, as well as the successful launch of our new digital business lines. We also made excellent progress on reducing our leverage with a line of sight to hitting our 4x target sometime in 2020 had the pandemic not hit. But of course it did. And while our priority moved to guiding the company through the pandemic, we retained our focus on opportunities for growth acceleration and improved operating efficiency, and continue to pay down debt to the tune of $300 million, even generating free cash flow from operations despite significant pandemic-related revenue declines. I'll spend more time on the specific results of these efforts in the next section, but suffice it to say that we are confident that this work has positioned us well for the future. Now, on the revenue side, as I've said, the transition from an audio-first revenue strategy allows us to expand far beyond the radio advertising marketplace into the much larger and growing audio universe. Touching on the key characteristics of each, in broadcast, spot radio connects local and national advertisers to the very engaged fans of our 413 stations, and it's priced to deliver a very high ROI compared to most other media. Our network radio business does the same for our 7,300 affiliates. In that case, we generally provide programming to our affiliates who pay us with spots that we can then sell to national brands who are seeking national radio exposure. On the digital side, we currently participate in 3 primary areas: streaming, which is the digital simulcast and on-demand distribution of our broadcast shows, podcasting, and digital marketing services. Inherent in our radio first strategy is the synergistic interplay of these digital additions with our traditional radio business. Streaming not only brings in new listeners, but it also helps our talent serve existing audiences more fully, giving them the opportunity to listen on demand. Podcasting is a natural match for us, given our legacy radio experience in how to build and monetize personality-driven audio audiences. And our success at bringing new audio talent into the company through podcast, as well as using it to provide new audiences for our traditional radio stars, is particularly exciting. Finally, digital marketing services has been a very logical expansion of our relationship with our local customers. Not only do radio and digital ads work very well together, lifting ROI by 19%, but many of our clients also appreciate the ability to work with one seller who can meet most of their media needs. On the expense side, we are aggressive about improving our operating leverage and financial efficiency. In the height of the pandemic alone, we significantly reduced our fixed expenses, having already expanded EBITDA margins before that. We apply the same discipline to debt reduction. Since emerging from bankruptcy, we paid down approximately 45% or $600 million of debt from free cash flow generation and highly accretive asset divestitures. And with our expected strong cash flow from operations, we are on track to reduce our net leverage to below 4 times as EBITDA recovers. We've also been active in executing value-enhancing partnerships and M&A transactions that benefit from or improve our audio-first positioning. 2 recently announced partnerships are with WynnBET and Dan Bongino. The WynnBET partnership takes full advantage of our audio-first positioning in a multi-year, multi-platform advertising and content relationship where a portion of the payment to us is in WynnBET equity. The Dan Bongino partnership, which has gotten off to a record start, is another example of how audio-first allows us to leverage our talent. Additionally, we continue to opportunistically pursue M&A consistent with our general portfolio optimization principle of growing in markets where there's a path to sustainable profitability. And we've also been highly focused on monetizing the company's non-essential assets. Between 2018 and 2021, we divested land, towers, and certain non-core stations, generating nearly $480 million of gross proceeds for the company. So moving to our recent performance, our strong Q2 results reflected our continued upward trajectory out of the pandemic as we posted revenue growth of more than 50%. We also announced guidance on additional fixed cost reductions, another non-core asset sale of land in Nashville, and the 2 new partnerships which I just mentioned. Importantly, we also gave 2022 guidance at a range of $175 to $200 million. Our 2022 outlook is a good segue to the way we think about our value creation model on a forward-looking basis. This page isn't exhaustive, of course, but it does summarize the key drivers of shareholder value creation. First, additional recovery of the radio industry. Second, robust digital growth. Third, improved operating leverage. Fourth, execution of strategically important and accretive M&A and investments. And finally, anticipated continuing strong free cash flow generation and delevering of the balance sheet. Today, as we continue to evolve into the audio-first model, the trajectory of the traditional radio remains a primary factor. As such, part of what drives our expected recovery is the continued post-pandemic rebound in the radio industry. As companies return to work, we expect to see a greater return of historical driving patterns and a corresponding lift in listenership closer to pre-pandemic levels. We expect this listenership recovery to drive additional revenue recovery in our high-margin radio business. And another way to look at this is by radio industry category spending to date. While some categories are exceeding 2019, many categories remain substantially below 2019 because they are still experiencing the knock-on effects from the pandemic. Auto, for instance, has suffered from chip shortages, retail and restaurants from labor shortages. As these factors correct, recapturing even a portion of what was lost represents a significant revenue opportunity. Second, our adoption of an audio-first strategy and the addition of digital services drive growth in two ways. First, we will benefit from the robust upward trajectories of these digital markets. And second, we are leveraging our talent and content creation capabilities in our sales force, expanding the value they can produce. In the expanding streaming market, we reach listeners who consume digitally through earbuds and headphones and increasingly through smart speakers, which have become the new in-home radio. We sell both our own stream content, 30% of which is consumed through smart speakers, as well as third-party streaming impressions, which we can use to satisfy client needs. Podcasting is a fast-growing digital format which is in high demand by national advertisers. We are well positioned to continue to prosper in this growing market, given our stable of talent, profitable operations, and excellent sales execution. And then we have our digital marketing services, which are a nice supplement to the other digital products we sell and sought after by a large segment of SMBs. This segment, generally SMBs with fewer than 50 employees, constitute a market estimated to be around 15 billion and growing to 5 to 10% a year. Third, it is in our DNA to be relentless cost cutters. While we've recently increased our fixed cost reduction guidance from 50 million to 70 million, we're continuously focusing on new ways to reduce expenses. And of course, additional fixed cost reductions will inure to the benefit of our operating leverage. Fourth, M&A represents a key lever which we can use to derive better and faster results from our strategy. You can see here that we've done a lot of M&A historically, and that's created significant value. As we look ahead, we envision executing additional M&A deals that optimize the radio station portfolio, as well as other transactions that fuel digital growth. Finally, our free cash flow profile and our balance sheet are huge assets for us. We expect to further delever to below 4 times net debt to EBITDA in 2022, which will continue to improve our flexibility to allocate capital to drive shareholder returns. So before we move into the Q&A, I just want to take you back to that first slide. Why should you invest in Cumulus Media now? We believe that our multidimensional audio-first model is strategically compelling, leveraging our strengths in an attractive and fast-growing audio market, not to mention the fact that radio is particularly well positioned to benefit from the continued recovery. Our balanced business model supports top-line growth while retaining attractive free cash flow characteristics and the ability to invest to drive shareholder value. Importantly, we have the right team, an experienced and engaged board, and a highly focused, aggressive, results-oriented leadership group to execute our plan. And finally, as I mentioned when we started, we believe, as do all of our equity research analysts, that the current stock price reflects significant unrecognized upside potential. Thank you for your time and consideration.
Thanks, Mary, for those insights in this new company presentation. I wanted to start off with some big picture questions and then drill down from there. You gave some very impressive examples of how under your new model, the multi-dimensional audio first model, as you called it, you're able to leverage talent and content across platforms to build your listener base. How replicable are those examples?
You know, they're very replicable. Maybe not always at the scale that you would get with big regional and national names like Bert Weiss and Ben Shapiro, but certainly in terms of overall magnitude. You know, for instance, in almost every single one of our 86 markets has at least one show that is distributed through podcasts, and there are numerous examples where a local station has been able to very impressively magnify its local listenership with podcasts. One that comes to mind is Michigan Insider. It's a popular sports talk station on Ann Arbor's WKTA, which very much like the Burt Show, repurposes its daily broadcast content into a bunch of bite-sized daily podcasts, and that has nearly 200,000 downloads every month. And again, we have many similar examples. I think it's important to note that there's been minimal investment in local podcasting up to this point, including the Michigan Insider and other very successful ones. So as we start to put more investment into local podcasting, we expect we'll deliver bigger results. I would also say, in addition, we work aggressively to expand the ways that people who like to consume their audio content digitally can find our talent. We want to make sure they can find it in a variety of ways, in a variety of devices. And substantially all of our programs are now available through multiple streaming platforms, including TuneIn and now Audacy, whose app platform we joined last week, as well as our own apps and other third-party aggregators. So all of those allow listeners to listen how and where they want. Streaming is a terrific audience builder, and in some cases generating really big numbers. Like with our sports powerhouse, for example, the Ticket in Dallas, which reaches several 100,000 people every month. So to sum up, I would say the expansion of our distribution through all these platforms and the using of our talent across these different platforms with repurpose or new content is entirely in keeping with the principles of our audio first model, leveraging our talent and content to grow audiences and sellable impressions. So punchline, easily replicable and highly cost effective.
Seems like a great opportunity. Let's move over to digital. You've got 3 digital business lines: streaming, podcast, and digital marketing services. Specifically regarding podcasting, it's obviously been an exciting growth revenue line for you and your competitors. How do you think about your position in the space and your lane versus others?
Yeah, we have 3 strong and growing digital revenue lines, and yes, we do continue to see podcast as a high potential growth opportunity, because of the success we've already had, and also because it is intrinsically such a natural extension of the skills and capabilities that we've built over decades, particularly when we're talking about personality-driven podcasts that have more frequency and are more topical than other genres. We see podcasting as one more tool in the toolkit that we can use to generate incremental audiences for our talent. And given our history in broadcast and network radio, we believe we're uniquely positioned to succeed with personality-driven content. And as importantly, we know how to monetize it very effectively and efficiently. And I think that combination is exactly why we've been able to attract talent to our platform, whom we've helped to generate over, as I said in the presentation, over 1.2 billion downloads in 2020. And it's why we continue to grow this business nicely on a totally organic basis to date.
One of your other growth drivers you mentioned in your presentation is digital marketing services. You mentioned that the segment you're competing in is about a $15 billion market and it's growing. How do you utilize your position there to accelerate growth, and what is the long-term revenue potential there?
Among our fundamental assets is our sales organization. 800 feet on the street in 86 markets who can walk product through the door and form relationships with SMBs. And then, of course, we already have our current tens of thousands of current business relationships. And we believe that perfectly positions us to be able to participate in a big way in the growing digital marketing services market. If you think about it this way, small local businesses, if you know any of them, you know that they're overwhelmed by all of the media available to them, and they're starting to ignore that tsunami of texts or emails or cold phone calls that they get from digital marketing services providers. So as I said in the presentation, they appreciate dealing with a trusted in-person partner who understands their business and can meet most of their media needs with a combination of products. So the products themselves, the digital marketing products themselves, are changing all the time. So to date, we've mostly developed white label partnerships with great economics to us. where we take on the sales opportunity and then leave the back end challenges to others. So, we've grown this business from nothing to tens of millions of dollars over just a couple of years. And we're just starting to add fuel to this fire. And it could even actually be an area of acquisition for us if we see the right fit. But either way, with a market that big and fragmented and a market where there's no clear leader yet, we believe there is a ton of upside for us to participate in.
Let's move over to the financials and capital allocation. You guided EBITDA in 2022 to be 175 to 200 million. What does that imply for the top line?
If you look at the fixed costs we've taken out of the business versus 2019, which I mentioned earlier will be more than 70 million, and then you just do that math against the 2019 EBITDA, you can get to a revenue number in the 1 billion to 1 billion 25 million range. There's a little bit, I just want to add, there's a little more variability to that number than usual, of course, with the ultimate result depending on how our revenue mix evolves over the course of the pandemic recovery. And we're also baking in an expectation of the continued recovery in the audio market and some improvement in the categories that I mentioned affected by supply chain issues and labor shortages. And those all factor into our view.
Gotcha. On the balance sheet, you reiterated your target for 4 times net leverage. Can you comment on the timing for that and how you will view on that effect, and how your view on that affects your thinking on other capital allocation opportunities?
Yeah, first, I want to say we're pleased that we were able to generate free cash flow from operations and reduce net debt by $300 million during the pandemic. So as we look forward, we have confidence that, given the superior cash generation capabilities of our radio business, we'll be able to hit that target next year. That's not to say that we'll only use cash for delevering. As we've noted, we're being very proactive in looking at investments and acquisitions. And if we see something that makes sense, we would pursue that. We also continually, look at our portfolio optimization actions and our opportunities, and could execute something in that area as well. Could be a buy or a sell depending on the market, if it's accretive. In the absence of an attractive deal, there could also be an opportunity to return capital to shareholders. So as we finish our 2022 budgeting process later this year, we're also going to review with the board our updated capital allocation plans.
And you mentioned again the M&A opportunities. What are you looking at?
Well, the broad answer, as any good steward would say, is that we're open to anything that builds value for our shareholders. Proactively, however, we're focused on a few areas. First, I'd say we see a lot of opportunities, I mentioned, in our digital marketing service business, particularly in the under 50 employee SMB segment. Not surprisingly, our podcast business, which has been a strong performer for us. And so if we can accelerate its growth through M&A, we'd be interested. And we're also not ignoring the radio business. The pandemic has been pretty hard on the industry, so there may be some interesting accretive opportunities coming out of that for us, even without any more deregulation.
Well, Mary, thank you for your time today, and thank you for giving us the first view of your presentation. It was terrific, and I wanted to encourage any of the audience to go out there and look on channelchek.com for additional information on Cumulus Media, and look for my research reports, which kind of highlight how I arrive at my $27 price target. So I would encourage you to take a look at that. And again, thanks, Mary, for joining us today.
Thank you, Mike.
Thank you for joining us for this C-Suite interview presentation brought to you by ChannelChek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and microcap companies listed.